Right. Good morning, everybody. There's a sale in the stock market this morning. It's looking like deep discounts. Got front door going, cheap stock, get your cheap stock here. All right. Obviously, markets got bled out badly last night. Nasdaq taking an absolute beat, and I haven't seen 3% out of the Nasdaq since I can remember. I mean, all of the high flyers, all of the leaders in the tech space have been absolutely decimated. You saw yesterday things like Netflix down about 8%. We saw Facebook down 5%. I mean, you can go across the board. I don't think there's anything that wasn't down at least 2.7% on my screen that I could think of out of the Nasdaq. Tech sector just getting absolutely brutalized. I mean, it happened everywhere, but the tech sector really led the rally. The interesting thing was is that looking at the energy space in the States, looking at um, the basic materials and those sort of sectors actually held up the best. And if you see what we saw yesterday between gold, platinum stocks and what they did and the squeezes that we've seen over the past two sessions, mind-boggling. I don't want to say anything, but there's about a couple of people standing behind me right now, pat me on the back for the calls that I made yesterday and things like Amplats and Paulas and that. So you could see that the turn was coming. The squeeze is a joke. Whether that's going to happen in those others, the more diversified miners, is yet to be seen. I think we might need to see a little bit of a turn in things like the copper price. We did see a turn off the bottom yesterday. We were at 228 at the beginning of the session. We traded at 232 and change. And copper after toward the end of the U.S. session, we're off a bit from there. Well, I think we need to see oil and copper and iron ore maybe kind of find a bottom here before we can push higher. We've had a lot of things that have happened because of everything that's because of the Fed minutes from the other day. Now we're starting to see a bit of a weakening in the dollar, which is also giving a bit of support to the precious metals and commodity space. Right, moving on into Asia, pretty much a bloodbath there across the board. The Australian market down 1.4% as we speak. That's the best of the lot. Everything getting absolutely hammered again. Shanghai, we're right on the fringe of dropping major support now in Shanghai, and that's really, really worrying. With the Nikkei, which fell through the 20,000 level. So some of the markets now falling into 10% correction territory. The S&P last night went red for the year. So we're at obviously a real point of nervousness at the moment. I don't know how much more of a catalyst that we're going to need, because may be a little bit of fear. The selling begets selling, with fear just continuing to lead the way down. But it will be interesting today to see how we close out the week. I can't imagine that we have a big bounce. It's the last day of the week. I just can't see any reason why guys are going to want to take paper into the end of the week with the selling that we've seen. Okay, chart of interest today. This is a chart of implied probability for rate hike in September from the Fed, and you can see what's happened here. You can see it in line with the U.S. 10-year Treasuries, which have also dropped out of a bear flag. I'll show that to you in a minute on the charts. Yeah, we've got a little bit of a big pullback in expectations for the Fed. Interestingly enough, I've seen a couple couple of the investment banks that have come out of the last 2 days and saying that they actually think the Fed is gonna hike in September. I think if they do that, geez, it'll really catch the market off guard now, and it's probably the wrong time. Because of that factor, I think the Fed will know that, and I think the Fed won't hike, but we'll have to see when it comes in the next couple of weeks. Right, this morning we had Grindrod headline earnings per share at 44 cents. Looks like it was mostly in line. We're looking at half-year numbers here versus full-year numbers, so I don't want to even try to compare it. Divi per share looks better by 2 cents. We got a handful of stocks going to ex-div over the weekend. That's CFP, FFA, FFB, AIA, MRF, and MTN. So MTN's the only one, obviously, of note there. For rent 80 over the weekend. All right. In terms of market data, we had the PMI numbers, manufacturing numbers out of Japan and out of China overnight. The Chinese numbers are shocking, worst numbers since 2009 out of China. I mean, I think that should go without saying. We know that, or we should have known that the numbers were going to be quite poor there, and I think they're going to continue to be poor for some time. So, and the market doesn't necessarily expect good numbers coming out there. And we also have PMI numbers in Europe and Germany and the States, and we've got consumer confidence in the Eurozone as well at 4. All right, let's get into some of the maps. Just going to do a little back padding here to start. No, I'll do that to finish. Let's start here with spot gold. So we showed this chart on the breakdown when it happened. Let me go a little bit further out just to give the big picture here. So when we dropped out of this setup here, okay, this was where we were kind of jumping on some of the shorts. We called this one as it broke beautifully. You can see here we're coming up to fully test right now. That's at about 1150, call it 1160. That's a full retest of resistance. We still haven't broken out of the downtrend. That would be dramatically higher. So, can this thing bounce a little bit more? Yes. John Paulson basically puked down here at the bottom, sub 1100, while Stanley Druckenmiller was picking it up. So we're seeing a little bit of a clever money rotation there. Stanley Druckenmiller doesn't get many wrong. So, maybe we have a little bit more left in this, but definitely hitting some resistance here technically. I have to keep that in mind over the next little bit. The next one we'll look at is the bond market. So this is the 10-year Treasury, and you can see here dropping out of major support in the bond market. If you look at this in terms of slightly bigger picture, you can see we definitely look like we're dropping out of a bit of a bear flag in the Treasury market. And that's obviously telling you that the market doesn't expect rates to go up necessarily. The next couple of meetings, not seeing any inflation or any growth in the pipeline. I mean, that's it in a nutshell, and that's probably the biggest thing that's negative in the market at the moment. All right, let's get on into some back padding here. This is MPLATS. If you guys were watching yesterday, I was talking about this one potentially getting up out of this little channel above 300. I said you got to own it. Got above 300 and went 50 rand in one day. So that's first little rip that we had yesterday. I also talked about Brait, which is making a bit of a head and shoulder formation, and talked about it failing kind of at the same sort of level yesterday at 36. Dropped our level as well, and you can see here a major reversal on the session and taking out the lows. This thing I think is opening us up a target down to about 120s, so just keep that in mind. There's definitely some more downside potentially out of Brait. Next one that we're going to look at is FirstRand, and I wanted to look at first. Let me just back up a little bit here. Didn't mean to go that far back, but okay, you can see here 50 is major level here in FirstRand. You can see how many times we've touched it and held. Sorry, that's actually 51. Somewhere between 50 and 51. Let's zoom in a little bit more. You can see here, so we got down to 50 down here. Okay, so somewhere between 50 and 51 is really our risk range. And in FirstRand, we're right now we're kind of been teetering around the 200-day because we've spent a lot of time here north of $50. A lot of these stocks that have been some of the high flyers are doing that and starting to take some of these guys out. And the major one I think is Standard Bank. Standard Bank, we talked about this yesterday as well. We talked about the 150 level, and we talked how big of a level it is, a head and shoulder setup. This is a major target to the downside here. I mean, I think first stop's got to be 140, which would kind of be the height of the shoulders. This thing's obviously going to open up lower this morning, as is pretty much the entire market. I mean, I can literally go through almost every stock on the board and show you lower targets. I mean, I can look at things like Sunlum. We can look at almost everything outside of the mining space now. MTN dropping major support. they're all dropping support, so you just got to keep that in mind. That's where we are in terms of the Aussie. We're looking at the same sort of thing as well. We're taking out those lows. We're starting to complete this pattern, and I think the target's probably down here. It's probably down around 42,000 in the bottom of this range, which could be quite a compelling level to buy if we get there in the next few weeks into the end of the year. And that's it for today, guys. Good luck out there.